Well, Peter Wells is the director of the Centre for Automotive Industry Research at Cardiff University. Hello to you, Peter. Tesla's results for the second quarter show a sharp drop, don't they, both in revenue and in profits too. How significant do you think those numbers are?
Well, I think it's easy to get focused in on the immediacy of the news. Understandable, of course, and these are, I think, for Tesla, a really significant shot across the bows, as we would say. But I think you need to look at the longer-term picture here. I think there was a period of time, maybe 24 months ago, when Tesla still had the opportunity to become what you might think of as a mature car company. In other words, running a business that followed the kind of practices and procedures and approaches of mainstream car companies. They didn't take that opportunity when they were cash rich, when their brands were strong, and when they still had a lot of public support. Now they're in a very difficult position. They've lost some of that support. They've still got a lot of cash, but they haven't been able to develop a full suite of really affordable, interesting, innovative models. They're resting on their laurels, and they're still under the control of Elon Musk. And I think that is probably their key problem.
I mean, vehicle deliveries fell by around 14%, didn't it? I mean, do you think this reflects, as you were saying, a weakening in demand for Tesla caused by the product and by Elon Musk himself? Or is there a case that some of this is to do with growing competition and price pressure, especially from Chinese EV makers?
Well, of course, in a sense, all of the above. But this is the transition from being a leading, innovative business in a new and emerging market to being just one of many in a much more mature market. It's not settled yet, but it's really maturing, which means many more competitors offering a diversity of products with all sorts of interesting innovations. And to be honest, I don't feel that Tesla has yet kept up the pace in that sense. They still have lots of advantages. They're getting revenue from their charging network, for example. They're still strongly vertically integrated, and that helps. But unless they can really focus in on developing that new product, I don't see how they're going to get out of this. And to be honest, I do not see that focus. It still seems to me that Elon Musk is talking about the robotaxis as being the future for Tesla. Well, I think he needs a stronger car brand before he goes down that route.
Talking of the brand, Elon Musk has highlighted Tesla's pivot, if you like, toward robotaxis and artificial intelligence. In your view, how realistic is this strategy in the near term? And do you think it can meaningfully offset weak car sales?
Well, I think this is what I mean by saying he should have done this earlier, because right now, I don't think it's a good timing. There are other competitors with products already in the market, further developed than Tesla, using a different technological approach than Tesla. And so I think it's far too early to be talking about significant revenue streams for autonomous Teslas when there's just one or two trial vehicles running around one city in Texas. This is the reality that Musk is currently facing. He talks a good game. He's very good at promising things into the future. But now the time is running out. The available space is being squeezed. And I'm not convinced that Tesla is able to pivot quickly enough to be able to capture that emerging market.
Peter Wells, live for us from Cardiff University. Thank you very much indeed.
Thank you.